Good morning, everyone. Welcome to this webinar on the Seawoods Grand Central, second property that we're listing here, given the strong demand that we got for the first property. Just waiting for most of the attendees to join before we start. Yeah. Right. So as more and more people join here, what I'm going to do is, as usual, I'm going to talk about this particular property. About Seawoods, Navi Mumbai. Some of you might have listened into our last webinar, which was also on the same property. So I might be repeating some of the stuff from there. But at the same time, this deal is slightly different. There are two properties here. I'm going to go through the investment note first, and as usual, I'm going to take your questions towards the end of the webinar. So let's start straight away. Let me open the. There you go. Right. So yeah. So let me speak a little bit about this property once again for those of you who are not familiar with uh, L&T Seawoods. L&T Seawoods is a mixed-use development which has both a retail mall, a 1 million square feet retail mall on the ground floor, which has been leased to various international tenants, including H&M and Zara, and so on. The mall has been bought by global real estate fund Blackstone Group. On top of the mall, there are two office towers, Tower 1 and Tower 2, both of which are about 950,000 square feet. Tower 1 is entirely sold to Blackstone as well. Now, the quick update on Tower 1 since our last webinar and our last listing is that the global co-working space WeWork, which has recently been valued at about $20 billion, has just taken up 250,000 square feet in this tower. So that's an amazing lease for this whole development because WeWork brings with it a lot of young professionals, uh, technology professionals who come and work there. And WeWork has a very, very stringent selection criteria when it comes to building. They only get into grade A developments where they see a strong scope uh, for young professionals to come and work. They've chosen this particular building amongst various others that they've seen in Navi Mumbai. They've also chosen Navi Mumbai as a location because they feel that there is a strong catchment area here of young professionals who are working in various companies or starting their own companies. So wherever WeWork gets in any building, the appreciation has been historically very, very strong. So we should be very, very happy that WeWork has chosen L&T Seawoods to take up space. They've taken a pretty large space, 250,000 square feet here. In the other tower is sold by L&T to various investors and end users. One full floor has been sold to SBI Life Insurance, which occupies that particular floor. The top two floors are leased to Teva Pharma, which is a multi-billion-dollar US-based pharma company. One of the floors that we are buying, or quarter of a floor that we are buying, is leased to Ansell, which is an Australian manufacturer of protective gloves. And there are also various other tenants like the Actuaries Institute of India, uh, some industrial and manufacturing tenants who are already in the Navi Mumbai and Vashi area, and so on. Below this development, it's India's first transit-oriented development, and what that means is that the government gave this land to L&T to develop in exchange for redeveloping a railway station at the bottom. And that railway station is now fully functional. It's called the Seawood Station. It connects Navi Mumbai all the way to Thane in the north. To the south, it connects Navi Mumbai to Panvel and Kharghar, and it also connects through the harbour line to central Mumbai, Dadar, and Victoria Terminus. So extremely well connected. For employees, of course, it's a great thing because they can travel straight to their work through trains, which is the most used transport link in Mumbai. Therefore, for employers, it's very easy to retain employees. Um, The employees have access to the mall, to the food court. So it's a pretty good place to work. That's why more and more employees are choosing this particular development to lease their space. In the previous unit that we purchased, which was on the ninth floor, which is exactly above, two floors above the seventh floor unit, which you see here on the left, we are in discussions with a Netherlands-based company called FlyTXT, an artificial intelligence company which is already in Vashi. It has 50 employees there, but they are expanding to 150 employees and they're looking for space. They've already had multiple inspections, and we are waiting for the CEO visit to happen in the first week of April before confirmation on that lease. We are pretty hopeful of signing that lease within the middle of April. In this particular transaction, as you can see here on this photograph, there are two units. One is on the sixth floor, which is on the right-hand side, which has been leased to Ansell, the Australian manufacturing company. The lease deed has already been signed. Ansell has been doing fit-outs on this property for the last 2 months, and the lease is set to start from 20th of April. On the seventh floor lease, which is 2 floors below our ninth floor unit, which we bought earlier, this is currently vacant, but it has been shown to 3 prospective tenants already by JLL and CBRE, who are the marketing agents that we've hired. And we've got pretty good responses from all 3 of them. We are hoping to sign something with them by the end of next month, right? So this particular deal, once again, 13,563 rupees per square foot. It is about 200 rupees per square foot more than our last transaction. And the reason for that is, for the 40% leased, there is no rent guarantee because it's already rented, and the lease is starting by 20th, like I said. So cash flows will start earlier, because of which we can pay a little bit more, because we don't need to wait for the lease to start, right? But the yield is again exactly the same, 9%. For the Ansell lease, which I'll talk about later, it's a 9-year lease, 3-year lock-in. They cannot leave for 3 years. They've done the fit outs themselves, so very small chance that they are going to leave the premises. Moving on to the property itself, like I was saying, it has been certified by the International LEED Certifying Agency as a LEED Gold building, which is just one grade below platinum. Given, as you can see, the triple height lobby heights, the great ceilings, the materials used in the development, taking all that into account, this building has been given a LEED Gold certification. The mall itself, Seawood Grand Central, already operational, more than 100,000 footfalls in the weekend. Some of the international big brands already here, doing extremely well. It has been purchased by Blackstone. If we look at the project master plan very quickly, you can see the 2 towers in front and the mall at the bottom. And there is a Seawood railway station at the back. Behind this, there's some future development where L&T is going to develop some residential projects, which they are going to launch, as per our last conversation with them, end of June. And the price is going to be close to 16,000 rupees a square foot. So you can already see that our purchase price of 13,500 is very conservative. Mostly it's going to make investors quite a bit of money going forward, especially once the residential is done and the mall is has more footfalls once all the offices are leased. Quick floor plan of the 2 units that we are buying. On the right, the corner unit is the one that's leased to Ansell. It's 4,240 square feet. It's about 40% of the transaction. It's in Wing F. Like I was mentioning in my last presentation, Wing F and Wing D are the most premium wings because they are directly sea-facing units. The one at the back faces the Panvel Hills, so it's not preferred by tenants. Even our other floor, or the other floor on the sixth floor, 6,748 square feet, is also in the better part of the building, which is Wing D. It's the corner unit. If you recall from our previous presentation, the same floor on floor number 9 is where we purchased the earlier office floor for 14,320 square feet. Now, quick investment highlights on this deal. A great yield, 9%, is the highest on the platform currently. 17.1% IRR, 2 times multiple of capital in about 5 years hold. So very, very low risk. A grade A multinational tenant already occupies 40% of the space. Ansel, they manufacture protective and medical gloves. We are also providing for a 5-month rent guarantee in for the vacant space. The vacant space, we will most likely close this transaction middle of May or end of April. Therefore, it gives us middle of May plus another 5 months rent guarantee, which will take us all the way till November. So we have time till November to lease 6,000 square feet. It should not take so much time, but we've just been a bit conservative there. All investors will get rents during that entire time, starting from May till November, irrespective of whether there is a tenant or not. In case there is a tenant, then that entire amount of rent guarantee will be returned to all investors. Once again, a A plus platinum grade building, one of the best quality buildings in Mumbai today. In terms of location and connectivity, of course, a lot of things happening in Navi Mumbai right now. As many of you might have read in the papers, the Prime Minister just inaugurated the new Navi Mumbai airport in February, and the first runway and the first terminal, the deadline that has been given to GVK is end of 2019. Although we feel that it'll most likely come up somewhere in 2020. Right, and since it's a greenfield development, not a redevelopment, it'll happen much faster because the land has already been acquired. So putting in a terminal and uh, one strip should not be that difficult, right? So that is a big infrastructure development that's going to happen here. Whenever a new airport comes in the vicinity, roads and infrastructure improve. All the airlines need to move their offices and find places for their staff to stay in. So there's a lot of buzz around that particular neighborhood and area. We've seen that in the past in Hyderabad, in Bangalore, where the new airports have come up. So that's a very interesting initiative that's taken place here. The second one is the Trans Harbour Link, which connects the Jawaharlal Nehru Port Trust to central Mumbai. The connection is being done by L&T itself. The tender has been given to awarded to L&T. They've started the work. This is a much bigger ceiling compared to the Bandra Worli ceiling, so it will take about 4 years. Estimated completion time as per L&T is about 2022. So that will seriously connect this part of the city to mainland Mumbai. And of course, the biggest port in West India, the JNPT, is also right here, as you can see in this map, right around here. Right. So the other thing that's not mentioned here is the LNT, the metro. The metro line is there's currently a local metro line under construction only for Navi Mumbai, which will be done by end of this year, right? So that does not connect to the actual metro that is operational. The first metro line, which was from Ghatkopar to Warsaw, is already operational in Mumbai. The second metro line from South Mumbai all the way to the airport is currently under construction and should be done by 2019. There is also metro connecting Thane to the central metro. The Navi Mumbai metro is going to connect through the Thane metro to the actual central metro line once that is completed by 2020. So, and the Navi Mumbai stop, which is at CBD Belapur, is 2 kilometers from this site. So, in terms of connectivity and infrastructure, there are very few opportunities or properties that I've seen that has all of these things working together, right? Which is happening in this case. So property prices in this particular area is going to increase substantially over the next 4 to 5 years once all of this is in place. Right? All we need to do is get in at a good price, have a good tenant, and wait for all these infrastructure initiatives to kick in. The purchase price pick up, we are buying this property for 15 crores. Uh, Stamp duty, registration, etc., brokerage to JLL. We've also kept a reserve of 6,55,000 in case we need it in the future. We don't want to draw down capital from investors. That will be refunded on sale. And the legal diligence will be done by Amarchand Mangaldas once again. The registration is 60,000 rupees. So the whole thing adds up to a total all-in price of 15,999, which is actually lesser than our last transaction. And like I was mentioning, that's because we have a rent guarantee only for 60% of the space here. The rent for the Ansel lease is starting on April 20th. We already had a 10% discount to the current prices at which L&T is selling smaller units there. If you go to the L&T website and call up the customer service team, they will quote you a price of 16,000. and they settle at around 15,000 rupees a square foot. We are getting this deal because now we've done 40 crores worth of transactions with L&T, 23 crores for the first transaction and 17 crores here. So we are one of their high value customers. We are buying in wholesale and bulk. That is the great thing about property share, because as an investor who's investing 20 lakhs or 30 lakhs, you're actually getting a price negotiated for 17 crores. In this case, we could almost say 40 crores, because that's the kind of level of transaction we've done with L&T. And they've been very happy with the professionalism with which property share has done the diligence, signed all the documentation, and so on. The indicative rental yield, once again, very easy. 104 rupees per square foot is the prevailing rent. That's the rent at which Ansel lease has been signed. That is the rent at which Teva Pharma has signed the deal. It sets up to 9% rental yield at our current purchase price. The property will be funded fully by equity. There's no option to take debt here. In terms of rental yield, 8.08% topped up to 9, which becomes 9.25 in year 4 once the 15% escalation kicks in after 3 years. So what that means is that the average rental yield over 5 years is going to be closer to 9%. And so if you're comparing this investment with any other investment you might be making, then 9% is what this investment will return, even if there is no capital appreciation. That's a very, very significant point, because there is no product in the market today which is going to give you that sort of a fixed return and an ability to earn upside on your investment, which will be far more than the 10% that we are conservatively estimating for this property. Coming to the tenancy, the Ansel lease, the lease was signed in December of 2017. They were given 3 months to do their fit outs, actually 45 days to do their fit outs, which they started in middle of February. So that fit out period is now complete. They're going to start rents from April 20th. The rent is 104 rupees per square foot per month. There's a 15% escalation every 3 years. The rent escalates to 120 rupees in 3 years time. The lease duration, it says 5 years here, but it's actually 9 years. The reason that tenants sign a 5-year lease is that the stamp duty is prohibitively high after 5 years. So what every tenant does is sign a 5-year lease with a side letter for another 4 years, which is what has happened in this case as well. So for all practical purposes, it's a 9-year lease, 3-year lock-in. The financial model, again, pretty straightforward. So the rent comes in for 40% of the space immediately. For 60%, we've estimated end of this year. 6 months to 8 months rent deposit already received, on which will be put in the ICICI Bank FD and distributed to all investors. Sets up to a very, very lucrative 17.1% IRR and a 2.04x multiple of invested capital. So if you invest 100, you will get 204 back at the end of 5 years. Now, I like talking about this table. It kind of tells you how conservative this investment is. Even if the appreciation is only 5%, the appreciation is only 5%, and we are able to sell after 5 years in 2023 at 20,000 rupees a square foot. Investors will still make 12.8% IRR and 1.7x MOIC. There are very few investment products that give this sort of a return with underlying capital appreciation and protection of capital. So the chances of losing money in this transaction is almost zero. Right? Even if the capital appreciation is 0%, like I was saying, you will still end up making 9% over 5 years. And the more likely scenario, which is most likely going to be 15%, you'll end up making 22% IRR and 2.5 times multiple of invested capital for a product whose risk category is significantly lower than all other products in the market. A quick look at our last property, the L&T Seawoods Grand Central one in Navi Mumbai. We had 94 investors there. We funded that property in 20 days, and 30% were non-resident Indians. Most of the investment was 20 to 50 lakhs, and most of our investors, we sent a mail a couple of days ago on who invests with property share. I don't know if you had a chance to look at that, but it kind of tells you that most of our investors are between 30 to 40 years of age and 40 to 50 years of age, who are in senior positions in tech and financial services companies In L&T, we had investors working in Google, in Boston Consulting Group, in McKinsey, in Goldman Sachs, Morgan Stanley, some large Middle Eastern companies like Capco, Kufpec, Aramco. We have a lot of big Indian tech companies as well, like TCS, Infosys. We've got international tech companies like Accenture. So very varied group of investors who know that there are very few opportunities today to invest their capital with this sort of a return. Similarly, in the capital BKC, Brigade Tech Park, Mangalore. So some of this stuff I've already gone through, so I'll not go through again. So in summary, I just want to say that it's a fantastic transaction in a great grade A level building. We've provided institutional grade analysis to you. We want investors to invest like the way Blackstone real estate investors invest, right? Our analysis is similar. It's the same way that the Blackstone Investment Committee in New York would evaluate this opportunity, right? This is the same type of presentation that we used to make to the Blackstone Investment Committee, the note, the model, everything. So, and we are providing that same level of analysis for normal retail investors to invest 20 lakhs. Fantastic building, already 40% leased, most likely going to be 100% leased in the next 30 to 45 days. Functional retail mall at the bottom, which kind of is already creating a buzz around this office building. It's a transit oriented development. The Seawoods station is already functional, connecting Mumbai, all parts of Mumbai, north, south, and central Mumbai. And a couple of big upside possibilities. One is, if for the 60% space that we are looking at, 2 out of the 3 tenants want us to do the fit outs. If that happens, then the yield on the fit outs is 20%. So the yield will go up for all investors. That's a big upside that can happen. So that's something that should be kept in mind. We've not mentioned it anywhere here, but that is likely to happen. Even on the 9th floor lease, Fly TXT wants us to do the fit out. So in that case, all investors will end up making a lot more than what is projected here. Right. So I'm going to start taking questions now on this transaction. So if you have any questions, just shoot it down there, and I'll try to answer as many of those as possible. Right, here we are. Okay. Mahesh Shivshankar is asking us, what if the property is not rented, still you will charge the management fee for that period? Very good question, Mahesh. We don't charge management fees when the property is vacant. We want a property share to be perfectly aligned with investors. We don't charge any management fee when the property is vacant. Therefore, we will make every effort to lease the property, because we don't get any fees unless you make the money. Nafis, are the units being purchased by property share in Tower 1 or Tower 2? It's Tower 2. Shridesh is asking, how do we make sure that there are no issues related to approvals, license, title deed, no ongoing litigation? Hridesh, we use Amarchand Mangaldas to do the diligence. They are India's biggest lawyers. They've already done the diligence for Blackstone also, by the way, and as late as January 2018. There are no red flags at all, and they will go through all the transactions. And anyway, we buy only completed properties which have an OC in place. Once you bracket yourself to buying properties which are already completed, you are already disassociating yourself with all the normal risks associated with properties in India, title and approvals and so on. In this case, once the OC is received, all approvals are already in place. OC was received in October of 2017 for this property. But that particular diligence report will also be shared with all the investors, so you can have a look. The next question, also from Hridesh, he's asked a couple of questions, so let me read them all out here. Do we get valuation done after purchase of the property? Yes, every 3 months we do a valuation with JLL. So that will be uploaded on your dashboard and you can have a look. Would we be getting the draft of the rent agreement? Of course, once you're an investor, you get to see everything, the property documents, the rent agreement, everything. Who takes care of housekeeping and common maintenance services such as electricity, gas, water, etc.? Well, the maintenance of this building is done by CBRE, for which every tenant pays CBRE 6 rupees, 12 rupees per square foot per month, which is over and above the rent, as is the case in every office building in India. So that will be taken care of by CBRE. Do we insure our property against damage? Of course, the property is insured by L&T themselves. On top of that, for every property that property share buys, we insure the property with one of the top three insurance companies for our unit. Fortunately, insurance of properties is not very expensive in India. You can insure a property of this size for 50 to 60,000 rupees against all forms of natural calamities and terrorist attacks, as well as get a rent guarantee from that. Nafi's rental yield of 9% reduces to 6% to the investor after deductions for taxes and management fee. Is my understanding correct? I think it's about 6.4 or 6.5% is the net post-tax, post-fees income in your hand. Mahesh is asking us why still capital shows on your website. Is some back deal happening there? No, there's no back deal happening there. We will be taking out that deal from the website, Mahesh, in a couple of days. Separate LLPs will be made for 6th and 7th floors, or it will be only one LLP? Very good question from Mahesh. This question has been asked by quite a few of our investors lately, who are a bit confused about how there are two units and how the ownership is going to happen. It's actually very simple. It's just going to be one LLP which is going to own both the properties. Both the properties will be registered in the LLP's name. So when you invest in the LLP, which is the special purpose vehicle which will buy these two properties, then you directly get a share in both of these properties, right? And the great thing about buying two properties in one LLP versus, let's say, buying a full unit in one LLP like we did for the last one is that it gives us flexibility on sale. Right? If there is a person who's only willing, who only has enough capital to buy a 6,000 square feet unit, we could sell him the 6,000 square feet floor first and then sell the 4,000 to somebody else, or we could sell the entire 10,000 to one person. Right? It gives us more liquidity options, more flexibility at the time of sale. So that is a real advantage in this particular case. Divyansh is asking us at what rent per square foot was we were taken up. That detail has not been shared with us because it's confidential by JLL. But I have kind of got a good sense of what that deal is from Blackstone. It's about 100 rupees a square foot, which is 4 rupees less than what everybody else has signed, which is, I would say, in fact, pretty high. I would have expected it to be lower than that. The reason is that WeWork is a very difficult negotiator, and they know that once they come into a building, the value of the building goes up, right? So they negotiate very hard with landlords these days, and I was pleasantly surprised that the rent was so high. Kind of tells me that we may actually get a lot more than 104 for this 6,000 square feet that is vacant, because once WeWork has signed the lease and they've started doing the fit outs, then the whole profile of the building goes up. Right now, as a landlord, I am not willing to settle at 104. I want the rent to be 110, which is what I've told L&T. So most likely that rent will be much higher than what we have projected for the 6,000 square feet space. Sandeep is asking what is rent free for 2 months. So Sandeep, the way corporate leases work is if the person is doing a lot of fit outs like the way WeWork or Ansel is doing, then they ask for a rent free period of 1 month to 45 days to do their fit outs. Right? We have provided in our model 2 months rent free for fit outs for the 6,000 square feet space. So during that time, the tenant kind of does all the fit outs, makes his cabins, floor, ceilings, and so on. Because the way a floor is developed is given to tenants in India is totally bare shell. It's like a garage. There is no flooring, there is no ceiling, there's nothing. So generally, we give them 30 to 45 days to do the fit outs. Atul is asking us, please share financial numbers from investors' point of view in Excel table. Of course, our investor relations team is on this call. They will send you an Excel sheet, and anybody else who wants it, they can just message it right here, and we will provide all of you with the Excels for your particular investment. Please mention the investment amount as well, so that we know what investment to send you. Shoban is asking us who audits the annual results. So we have an auditor called PTK, which is a pretty big auditor in Bangalore. They handle a lot of big accounts here. Our accounts are all audited by them every year. So as per the MCA regulations, every LLP account needs to be audited compulsorily every year. Uh, our audits have currently started for all the LLPs that we already own. After the audit is done, the entire audit report as well as the financials, cash flow statement, P&L account, balance sheet, the tax paid, everything is shared with all investors on the dashboard. Vivek is asking, AIM agreement clause 2.1 mentions that AIM will cease earlier of 5 years or sale. Uh, what happens if sale doesn't happen in 5 years? Who will manage the asset? In that case, Vivek, it can be, if you read the agreement, it says that it can be renewed. So you can renew the agreement with property share at the end of 4 years or 4.5 years once again. So no need to worry about that one. Hussein is asking us if the fit outs are done by us, what is the chance of the tenant leaving? How is the leasing agreement different compared to fit outs done by the tenant? Good question. If the fit outs are done by us, then what we insist on is a 5 year lock-in, not even a 3 year lock-in, right? So we tell them that look, we are spending the money here to do the fit outs for you. So you have to stay for 5 years. If you don't stay for 5 years, then you have to pay the entire fit out amount for the remainder of the term of the lease. Right? So that's how it is different. So in that way, it is in our hands. Mahesh is asking, what is the effect of LTCG on the income? Will it be charged on this income? Yes, long-term capital gains is charged on any capital asset which is sold after 2 years. Before 2 years, it's a short-term capital asset. Used to be three, but it was reduced to two in the budget last year, which is good. So if you hold this particular asset for more than 2 years, you qualify as a long-term capital asset, and the capital gains tax in India is very low. It's 20% after indexation. So what that means is that if you buy something for 100 and we sell after 3 years for 150, which is almost a 15%, let's say 130, which is a 10% gain, which is what we are assuming, then the government first gives you a 7% indexation, which takes your cost from 100 to 121 in 3 years, and you are supposed to pay the tax only on that 9 rupees between 130 and 121 at 20%, which is 1.8 rupees. So if you think about it, on a capital gain of 30 rupees, you are paying 1.8, which is a little over 6, which is 6%, which is very low compared to every other tax rate. So I always tell investors that real estate investment in India tax wise is the best. It gives the best post tax returns amongst all asset classes other than equity. All right, next question is from, well, his name is not mentioned here, but how much of completed property is occupied and what are the chances of property not going on rent? The property itself is 85% leased already, that office tower. So the chances of leasing 100% is very high. Most likely in the next 5 to 6 months, this entire property will be fully leased. Sangeeta is asking us, could you please clarify on the below one GST implications? So GST implications, Sangeeta, is that on the rent, the tenant has to pay GST of 18%, which is over and above our rent. So we are not worried about GST. They pay 18% on top of GST. We get the 104 rupees I'm talking about is after maintenance, after GST. Second question, I'm an NRI and this is my first property. Am I not eligible for one property exemption? Not sure what this means, Sangeeta. So I'm not sure what you mean by one property exemption. Why the management fee on total investment rather than rentals? We don't work on that rental model, Sangeeta. We work as investment managers. We charge the fee on your capital that you've invested, just like any investment manager would do, just like Blackstone would do, for example, so that our fees and our motivations are perfectly aligned with that of investors. Um, Next, Vivek is asking us what clauses not covered in the documentation of an LLP are taken care of in the co-ownership agreement. There's no co-ownership agreement, Vivek. There's only one ownership agreement, which is the LLP agreement, which takes care of every decision of the LLP on the property. So, I mean, it's been drafted by Amarchand. We've gone through several iterations, obviously, after all the properties that we've done. We've pretty much optimized it for now for all investors. Abby Vora is asking, is maintenance paid by the tenant? If yes, why we are already paying in advance as additional charges? Maintenance is paid by the tenant, Abby, like I was mentioning, 12 rupees per square foot per month. But L&T, when they sell the property, insist on collecting the first 12 months of maintenance upfront. This is something that developers do even for residential projects. When you buy an apartment, they will ask you to pay 12 months of maintenance upfront so that they don't have to keep coming and asking for the maintenance from the owners in case that is not required, like in the case of the answer lease who's already paying that 12, then it's just a question of transferring that particular amount from the tenant to L&D. Next question is, if we are buying directly from L&T, why is there a brokerage in the cost of acquisition? A lot of people have asked this question, but there is a broker involved here. That's why we are paying a brokerage, which is JLL. JLL brought us this deal in the first place. They are the ones who said that there is an answer lease that has been signed in this particular building. This qualifies, I think, for your platform. And they've been there in every one of our meetings. And of course, for everything that we do, JLL has been very helpful. They will provide all the research reports. In case of a property tour, they will be present and they will explain everything. So that particular brokerage is payable to them. Next is Abby Bora is asking, can we invest capital gain in fractional ownership in the property platform? Answer is no, you cannot. You will not get any benefit. You have to invest the capital gain in another property, not in the shares of an LLP. Next question from Atul. Please share the financial numbers from investors' point of view in the investment table. I think I already answered this question. Nafis is asking us, property share model indicates performance fee of 20% and considers pre-tax cash flows. The model indicates that even when the appreciation is equal to the indexation and there's no capital gains, PS will get a performance fee. This is a question that is asked by many investors and we've answered several times. Performance fee is something that is payable if an investor makes returns higher than the opportunity cost of capital. Right? That's how every investment fund works, from Blackstone to KKR to Milestone and so on. Currently, in fact, the risk-free rate in India is about 5%, which is the fixed deposit rate. Right? So if an investor earns only 5% from a property share investment, then there is no reason why property share should be paid any performance fee, because that is something that the investor could have done himself. But in case the property share investors end up earning more than this opportunity cost of capital, then it is because property share has brought certain quality of investments on the platform and managed it in a way and sold it in a way that maximized returns for investors. And therefore, at that point of time, property share should be paid a performance fee. Now we've increased this 5% to 8%, the hurdle rate, right? So up to 8%, we don't charge anything. And it's pre-tax because even the 5% is pre-tax when you're comparing it against your opportunity cost of capital. So we are paid a fee only if you make an 8% IRR and more. Of that, also only 20%. So if you invest 100 and you make 120 in a year, then the 8 comes to you, and of the 12 we charge 2.4. So you get 17.6 and we get 2.4. This motivates us to sell the property at the highest price possible. Right? The higher the investor makes, the more property share makes. The lower investor makes, the lower property share makes. Sangeeta is asking once again, I'm an NRI and this is my first property. Am I not eligible for one property exemption on income from house property income tax? Sangeeta, you will not be eligible for any exemption from income tax because the property is owned by the LLP, and the incidence of the tax is also on the LLP, on the owner of the property. Now, if you were the owner directly, that is, the sale deed was in your name, then yes, you would have been exempted from that income, or rather, you would have had to pay tax on that income and you could have claimed an exemption. In this case, the LLP has to pay the tax, and therefore, as an investor in that LLP, you cannot set it off against your income, even if you are in a country where there is no tax. Nafis, do the investors pay the brokerage for the tenancy of the 6,000 square feet area? Good question. Yes, that brokerage is definitely going to be paid if and when CBRE gets it. That brokerage is generally 1 month's rent, 1 month to 45 days of rent. So that is provided for us, provided by us in the all-in price. In case the vacant property is rented during the rent guarantee period, there would be the refund of the rent guarantee amount. Could you please elaborate this? Yes. So Deepak, I mean, in case, let's say that we rent the property immediately, like today, and April end, which is when we need to pay for the property, we will not need the rent guarantee anymore, right? So we will just reduce the all-in price, and everybody's ownership percentage will go up, right? Or if it happens after the registration date when we've already raised the money, then we just refund the money back to investors, right? Because it is investors' money. So that's how it works. It's pretty straightforward. You can also say that I don't want the rent guarantee. Lower the price for me. It's possible. So if you invest 20 lakhs in that case, you will get shares worth 21 lakhs or 20 lakh 50,000, whatever the mathematics works out to. But you will not get any rent from May when everybody else is getting the rent for 5 months, in case it's not leased. Next question is from Nafis. Are there any instruments available to reinvest gains from commercial properties to save capital gains? No, Nafis. There are no instruments available to save the tax. If the LLP itself invests in another property after that, after 4 to 5 years, let's say that the LLP sells this property for 30 crores and there is a capital gains tax of 3 or 4 crores, which is the maximum there will be. Then if the LLP invests that 4 crores in another property, then there will be no tax payable. Sandeep Parmala is asking how much down payment do we need to do? Well, like in every property in the property share platform, 10% needs to be paid upfront and 90% at the time of registration, which is end of April in this case. Vivek is asking, can I get a loan on my share of the investment? You can't, Vivek. You can't get a loan. Of course, you can always get a loan yourself if you have a bank who's willing to fund your investment, but property share cannot arrange that loan. Abby Vora is asking, so Kunal, we will get maintenance fee refunded as tenant is paying already? Yes, that is right. Mahesh is asking, REIT versus LLP, what is the major difference? A lot of differences between REIT and LLP, Mahesh. One is REIT is a pooled vehicle where you don't decide which properties you get to buy. Right? The REIT manager buys the properties on your behalf. So he could buy a shopping mall, he could buy a warehouse in Panvel, he could buy an office building in Indore, he could buy an office in Calcutta. You have no say in that. Here in property share through the LLP, you directly invest in properties which you like. You may like this one, you may not like the next one. Therefore, you will say, I don't want to invest in that one. I want to invest in only those properties that I like. The second thing is the yield on a REIT is very low. It is sub 5% because the REIT also has under construction properties. A REIT is allowed to have 20% of its portfolio in under construction properties. Therefore, on 20%, the yield is zero. On 80%, the yield is 7%. And therefore, which is 5.6%. So the overall yield on 100% will be sub 5.6% pre-tax. So you can imagine how low the yield will be there. Next question. From Abby Bora, if I make another 20 lakh investment from my NRI account, then rental will be transferred into my NRO account. Again, another question from all NRIs. There's a blog that we put up on the site in the article section where we talk about NRI investments, and this is something that has been addressed there along with all other issues like repatriation and so on. As per RBI regulations, rupee deposits cannot be made into an NRE account because an NRE account is freely repatriable. It has to be made into a domestic NRO account. Therefore, the rents will always be credited to your NRO account. Vivek Gupta from Mumbai is asking, so the tax structure is LLP 20.9%, personal income tax 30%. No, Vivek, that's not the way it's done. Once the LLP pays the tax, you don't need to pay any tax. That income that has already been taxed. There is no double taxation. So once the LLP pays the tax, what you get in your hand is tax free. Rao is asking us, when is the expected registration date? Rao, it's 30th of April. So for the Ansel lease, in fact, it will definitely be 30th of April. We need to pay the full amount for the Ansel lease by 30th of April because the rents are starting from 21st April. Right, so we want to get the rents in as quickly as possible. For the other 60%, L&T has given us an option to do it later, but we would like to do everything by end of April, if possible. Right. I think that's about it. So looks like I've answered most of the questions here. I will hang around for another minute to see if you guys have any other questions. Happy to take them. But please do go through the FAQ section on the platform as well, because that answers a lot of the general normal questions that people have on property share and on NRI investment and repatriation and fees, and so on. Also, if any of you are visiting Bangalore at any point of time, please feel free to drop into office and meet our investor relations team as well as meet me. We are also traveling to Hong Kong next week to meet a few investors. So if any of you are from there, then do message us and we'll be happy to have a cup of coffee with you. I think a couple of questions have come in here. Nafis, considering the smaller floor area of 6,000 square foot, which is vacant, what is the quality of tenant expected? 6,000 square feet in Mumbai, Nafis, is a pretty high, pretty big area. Ansel, the Australian company, has taken up 4,200 square feet. So, you can imagine, because the rent is 100 rupees a square foot, which is on top of that, the tenant has to pay maintenance and so on. So, for 6,000 square feet, it's almost 6 lakh rupees per month, right? It's pretty high. Um, Divyansh is asking us, what if we do the fit outs and tenant leaves after 5 years, assuming 20% per annum? This only returns the investment and no return. How is this beneficial? Good question, Divyansh. So the way the fit out rent runs is over 9 years, but they may leave after 5 years, like you correctly mentioned. In that point, in that case, what will happen is, by the way, the return is a little more than 20. It's not 20. It'll almost be like 25. So you will end up making money on that lease. But what will happen is that we have those fit outs which over 5 years don't depreciate as much. The floors and ceilings and the cubicles, they don't depreciate as much. So we can actually rent it out again to the next tenant for, if you're renting it for 30 rupees, we can rent it out to the next tenant for 20 rupees. At this point of time, all of it is profit. The final question that I'm going to take today is from Vivek. If the profit or dividend after payment of LTCG for each partner exceeds 10 lakhs, will the tax of 10% be taken as per government norms? If the profit after payment of LTCG for each partner exceeds 10 lakhs, what will the tax of 10% be taken? Vivek, this LTCG has nothing to do with your personal tax. The LTCG is the tax incidence is on the LLP. The LLP pays the 20% LTCG on the capital gains after indexation, and after that, whatever be the amount, 10 lakhs, 20 lakhs, 10 crores or 20 crores, they are all tax free in your hands because tax on that income has already been paid, right? Um, so yeah, I think I have answered most of our questions. If you have any other questions, uh, you can always, like I said, visit the website or talk to Asma or Binoy in our investor relations team. They'll be happy to answer all those questions. A lot of people have also been asking us about property tours, right? We do a property tour for each of our properties. Um, and for this property as well, we will be sending out an email next week on the property tour. But if you are already in Mumbai, you can always go and see the property yourself. We can arrange it for you. Um, uh, we had a very prominent ex-sportsman who invested in our last property, who's also currently with the national team, and he visited the property last week. Various investors on their own have told us to schedule a visit, and we have arranged it with L&T. So their team will take you to the particular floor that we are buying. They will show you. They are familiar with us already, with me and the property share team. So they treat property share investors with a lot of respect. Of course, we've invested a lot with them. So I mean, we are very popular in terms of an investment product. Obviously, because there's nothing like this that exists in the market today. We are kind of giving access to this product, which was only available to HNIs earlier and institutional investors. We are allowing normal people to invest normal sums of money to get a piece of this grade A real estate. So, it has been pretty popular with everybody around. So, we will send out a mail on the property tour. But if you are in Mumbai or if you're visiting Mumbai, you give our investor relations team a call, and we'll be happy to answer. We'll be happy to take you there and show you around. All right, so that's about it. Thank you so much, everyone, for attending this webinar, and I hope if you're planning to invest in any property, then there cannot be anything better than this. It's very tough to find good properties to invest in India. Uh, we are looking at some new investments, but we've not found anything yet. It's not easy to qualify a property for the criteria that we have, which is grade A, already completed, a great developer in a very good location, less than 5% vacancy in the market, and so on. So, if you are looking to invest, I would advise you to do it at the earliest, because our pre-book period, as always, ends. We get a couple of investors who invest big amounts of money, 2-3 crores, and then we get quickly funded, and we need to remove it from pre-book. So then you will not get that 9% yield which you're getting right now. So I would advise you to move fast and talk to investor relations team and invest in the property as quickly as possible. Okay, thank you so much. Thank you, everyone, and have a happy Easter and a good long weekend to everybody. Thank you.